it's better not to do a deal rather than doing a bad deal. Property, that's the main thing, in terms of knowing your numbers is quite critical. You need to have a portfolio of people who you can call on speed dial. As a developer, it's not like you're trying to know everything. It's just to have a team around you. Your network is quite important. An architect working on a 24 unit might not be right for 3 units. We make sure the exit is right for us when we start the deal.
Oh, what a show. That's Bristol out the way. Our next stop is Birmingham on the 16th of July. Then on to Manchester on the 10th of September. And we'll be finishing the year in Leeds on the 8th of October. Why would you attend the show? Well, we have multiple expert speakers, industry-leading businesses exhibiting, and ample opportunity to network with fellow developers and investors. The best thing? Tickets are free. You can book your ticket today by heading to our website, propertydevelopershow.co.uk. I look forward to seeing you there. Welcome to another episode of the Property Developer Show, the podcast. Today, I'm joined by Sreelal from Provident Homes, who is a Milton Keynes-based developer who's moved from buy-to-lets into HMOs into development. Welcome to the show.
Welcome. Thank you so much.
Pleasure. You made obviously a bit of a trip up to Liverpool today, which I always appreciate. I'll dive straight into it. From all reports, and obviously we had the show in Milton Keynes, so I kind of got a bit of a feel for the area, and I appreciate you being one of the speakers, headline speakers for us on the day, which I really appreciate. But my kind of experience in Milton Keynes, it's a difficult place to invest.
That's right.
And add value, because it's 50 years old, you were saying.
It's just, 50 years old. It's a new city. Do something to offset London.
Yeah.
So
my question is, where do you find value, or where do you find the ability to add value where other people struggle?
Great question. So I think the place where we look at from, say is more commercial conversions. So you got pockets like, Wolverton, Bletchley, which are older sort of small towns used to be. Mm-hmm. And then there you have opportunity. The core Milton Keynes as such, as I said, it's only 50 years old. The developers has maximized it, it's mostly 50, 100 units have done it. There's not much space to expand, do all the new strategies of adding value. They're not too old where you can get run down properties and stuff. So people normally say it's very hard to do deals in Milton Keynes. Mm. So from the perspective we look is mostly disused office or stuff. The one we did is a commercial office, which was over COVID was empty. We bought it and converted into 7 beautiful apartments. Mm-hmm. So we get opportunities like that, where we're doing. But you need to be really quick. Absolutely. It's a tough market.
That was the assumption I made of Milton Keynes for sure. I mean, diving into that specific deal then, because I know there was some complexities with an overage or a restriction.
Yeah, we had. It's just knowing your, the whole area. So that was one of the building in a 4-acre plot. We had a restricted covenant on there, mm-hmm. which even the owner was not aware of it, but we were well connected. I had another friend who bought it, he knew it. So getting into the deal and, we had to make them aware there's something like that. And if they were to negotiate, it's going to run into, 50 or 70, 80 grand. Mm-hmm. But we had the expert in the term who are quite well-versed sort of into negotiating sort of deals. And we managed to get a price down. And during that time of getting those things down, we did a permitted development prior approval application.
Permitted development,
application. So we did like 3 applications on the go for 7, 8, and 9 units.
Nice.
We straight away got for approval for 7, and then we tried appeal for the 8 and 9, which we waited 6 months, didn't happen. But then we thought, okay, planner was quite confident. He was like 99% we should get this and stuff. But there was just one window additionally the architect put it, which even though you can put it, you should do through a sequence application. So as an office, make sure whatever openings you need to do, you do that first, get it approved within 56 days, and then you overlay on top of it with the residential application to do that. Mm-hmm. Then basically, that's something. So considering we had a bridge on the development, we didn't want to extend it anymore. Mm-hmm. So we said, let's crack on with the 7 units because it's already 5 units there. There was an uplift of 2 units, which is quite significant from where we did it. So it's just value addition, pockets of value addition from where you buying it, and then that's how you sort of make it. And it was quite straightforward in the sense, no alteration from outside or anything.
Amazing.
adding stud walls, creating 7 beautiful apartments, and it's in our portfolio for 7 units.
Happy days, great stuff. So in terms of the sort of point on bridging, where did it become a bit of a tipping point where you were kind of like, we need to just deliver this scheme? Obviously, the profits are being essentially eroded through the debt. Where was that kind of tipping point for you? Because I think a lot of people would maybe dither on that, if that's the right word for it. They might not necessarily. They might think, all right, we'll get the planning. It'll be next month. But where was that kind of right? Let's deliver the
So it's an opportunities cost. I mean, can we do more units in there? Because we were looking for 9 cluster home sort of thing. So all the shared spaces, which was wasted probably for every apartment scheme, somewhere around 25 to 15% is your corridor and stuff. So our architect came with a scheme, like we got bigger openings, so let's do 9 cluster homes which would come in there, sort of thing. But again, the complexities around that, the build cost going up and stuff, and then we did a cost exercise and said, the 7 units is quite straightforward scheme. A bridge is finishing in 12 months. We need to exit in there, sort of stuff. So yeah, it's just a number, doing the numbers and saying, we should get on with, converting that. The cost, just around 12% per annum, sort of thing. It's we already waited 6 months, which was not in the plan. We thought it would be happening in 3 months' time. Already went to 6 months. So it was just more of a cost exercise and just saying, okay, get on with it and sort of, more with the.
That's the tricky thing about developing, and particularly when you're using debt to deliver schemes. It's trying to keep things on schedule, because each month it's just heaps of money being burnt, essentially.
That's right.
Although it's a paper exercise, it's still the bottom line that is impacted.
Yeah, with property, that's the main thing, in terms of knowing your numbers is quite critical. We've done so far 4 development sites, and it's just, you follow an S-curve. Your purchase price is fine. The more you do into the building, you're borrowing more money, and the interest on the money is there. So when you say a subby, because of some schedule changes, he said, oh, I can't be coming next week, next month or a few weeks later. If you borrowed $1 million, let's say 10% or 12% of thing, your burn rate is $8,000 a month. So somebody is charging you, be next week, another subby, he's happy to come, but he's going to charge you $2,000 more. I mean, if you know your numbers and you know where you're playing, okay, please do come, because I'm still going to save $6,000 compared to the other guy normally I work with is going to not be available for any other reason. They might be committed to something else. And knowing that, and then you need to understand, you need to finish the project right on time, on budget. There could be challenges. Always there are challenges. It's just how you're going to navigate around it and sort of,
Absolutely.
complete.
What sort of processes do you have in place to manage that?
So, I mean, for us, start with, when we had, more projects on the managing all the finance was a bit of a tough. So we got a bookkeeper account and getting on sort of saying what's our forecasted cost and what's the actual and how we're aligning with the timelines. There'll be always, changes to that and stuff. But then getting that on your background on a monthly basis, if you look, okay, that helps you to make decisions more promptly on what we actually need to do, how quickly we need to finish, where we need to adapt. Certain things, we can make a call and say, let's get on with it, or let's spend another $5-10,000 to get it over the line on a specific time. Yeah.
I mean, that to me is sort of a mistake I think people make in moving from, basically doing what you guys did with buy-to-let HMO development. People don't realize that the transition from buy-to-let HMO to developing, it's a new career, essentially. There's so many more moving parts to it. You've effectively got to run it as a business, not as an investment vehicle. It is very much, finance-driven, project management driven, deals-driven, leverage. It's so there's a few transferable skills, which is, it's property related and there's conveyancing involved, but everything else, in my opinion, I think is near enough ground zero in a sense of the setup to deliver successful scheme.
That's right, which is what when we came with, we had project managers who had decades of experience to sort of guide us on that side, contacts. So we had like 4 projects, all was delivered at different things. One was a JCT type contract, another one on a cost plus model. The one on Milton Keynes, we did a self-build managed sort of thing. So kind of understand the challenges, the good points, the bads about all those stuff. And then it's not right or wrong. It's just what works for the specific projects and how do you want to manage it. And definitely there was lots of learnings on the go.
Oh, God, yeah. So do you have a full-time project manager then, or is that a role that...
No, it is a role we hire for the project, saying, and it's so we operate 1 hour on Milton Keynes. That's the space, we don't think we can manage more than an hour to, because you have to be on site regularly or at least a couple of times in the week.
Yeah.
And, to actually manage that, you need to make sure, if somebody throws me a project 3 hours down the line or something, no, I can't, even if it's so profitable.
Yeah.
Maybe at some point, but not in a sort of strategy wise, we tend to focus on 3 to 30 units. That's a sweet spot, It's doesn't have to be, if it's 1 or 2 units, we think it's, you don't have that leverage and you're fighting with, small contractors, self-builders, which, they need very thin margins or they don't value at their time in terms of, what it is. It's just something they deliver. So we avoid those from 3 units, and 30 units is too small for the big boys. So that's kind of, space we find a thing, not too many competition. That's where we can kind of, get our hands on and sort of work on scalability.
Amazing. So that transition then over from, HMO developing to, effectively developing full time, what skills and what have you had to implement in the development business?
Okay, to start with, just before that, it's just like I didn't like buy-to-lets. So I started with buy-to-lets, such. Tried HMOs. Okay. HMOs where I got around 18 tenants, 18 rooms, and it just became a bit too noisy. And I thought, okay, I could scale to 100, but then I was an IT consulting job, software to property development. This is not something I'm look forward to managing.
Yeah.
So I thought, okay, what is that thing? And property development was exciting for me. And that's when I started, learning more into the skills, sort of, how to do things and sort of, got educated on that space and started working on that.
Okay.
So, but the one thing I've learned from our perspective as a developer, it's not like you're trying to know everything. It's just to have a team around you. It's just the people you can work with. Your network is quite important. And it's not like, since we operate, I said 3 to 30 units, we need to have a diverse skills of like architect. An architect who's working on a 24 unit might not be right for 3 units. Or, the planners. We got big planners who worked on the scheme, but the amount they charge could not make it work for the smaller ones. So you need to have a portfolio of people who you can call on speed dial when you have challenges. And it's just, which is why we had a network. We used to have a monthly developers network sort of thing we used to in London. So we sort of bring around 40 to 50 people and we're well connected. So definitely when there are challenges, it's just, not trying to pretend I know everything, just calling out, asking them, okay, mate, we got something like, this issue on site. How do we deal with it? And they might just, be happy to give, okay, get this contact or this utility consultant should be able to help you with, and they'll able to get you on speed with the challenges on there.
So then just on that point, what's your, I suppose, what would be your advice to someone that's maybe hasn't got that network yet? How could someone create, apart from attending obviously the property developer show per se?
That's
that
right.
goes without saying,
it's a great event, I would say, the Milton is once you smashed it.
I appreciate that, yeah. But other than the show, how else can people sort of start to develop that network?
I think your question is somebody transitioning from, let's say, a professional like me.
Yeah, so essentially following the same sort of journey that you've kind of gone through and moved away from, the simple stuff to, developing houses.
Yeah.
And sort of touching on that transition and, the people that maybe helped you here might not necessarily have been the right people to deliver development schemes. So how did you kind of build that network?
So for me, it's, so started, you need to get a mindset. Especially if you're working around and stuff into a more entrepreneurial mindset or being in that sort of group. For me, one thing is, knowing somebody in that. I'm somebody coming from abroad. So didn't know anything about it. So I have to buy into these networks of people to get your level up. So you need to have different levels. So I started with knowing all strategies. And what I understood is nothing is right or wrong. What fits your end goal. And to me, it was like, how do I scale this up? Buy-to-let is good. I like it because when I had buy-to-let and HMO, it's basically, buy-to-let is good. It's quite passive. People look after it very well, like their home and stuff. But the amount of, you cash flow at the end of the month is less. You need lots of those to get to some figure sort of thing. HMO is good. You got lots of money coming in. But if you look at the net figure, after putting all the efforts, wear and tear and everything, Maybe it's even less than buy-to-let sometimes. And I'm not a big advocate of over leveraging over commercial valuation and stuff, because that's something. So that would be good for sort of filling your gap on cash flow, but not necessarily something to scale a lot. You fill your cash flow and then you work on profit making sort of developments or other stuff what you like. So back to your question in terms of building network, it was a slow gradual stuff, because I still remember when I had going to network meetings. I had one buy-to-lets. Going and sit there was quite daunting to talk to people. They got 10, 15, 20 properties and said, I'm somebody just sitting in the corner, just one units. I want to get to something annoying. But then educating myself, with different, once you decide property is your thing, which, there might be good ones, bad ones. So just go and try out with multiple people. Everybody has got some nuggets to give you. Take the ones which is there. And when you have different parcels from the jigsaw and you get your own sort of thing, okay, this is what I want to work on. And then you'll find some inspiration, people who you resonate more with. The values, everything match. Okay, I like this guy. He's done something, 50 units, 100 units or something. I want to scale something, because I'm going to get, if I talk to, seeing Grant Cardone or something doing it, something not relatable. But somebody who's been doing, for me, is lucky to have a local guy who was like in a similar consulting, but he's like 4 or 5 years ahead of me. So just sort of, okay, how did you do this? And you just sort of, saying, okay, come along with me, I'll give you 1-to-1 on a, monthly basis just to do it. So it was a journey of personal development, if that makes sense.
Yeah, absolutely.
So that was more of, got more into reading, listening to, podcast, other stuff, and then getting to finally into networks. You get open to their networks. So I was part of multiple masterminds, and there you kind of, have a new group of friends whose thoughts are different. You're discussing, not anymore discussing football or cricket or any of the stuff. It's more what's happening in the world, what strategy is working. You learning from others' mistakes, where it's say, okay, they have a project. We are in sort of mastermind group. You got a development in saying, I got, the strong utility has been a big problem. I didn't have the consultant. I thought I'll save money on it and try to do myself. But then, so things like, okay, what's your contact? Let me have this. So you will try to fill those gaps and not make it. You might make something different, but not exactly the same. So learning from others' mistakes and sort of things. So I think in this current world, it's easy, because when you decided your strategy, you can buy into some groups, even and different levels at which you're playing. When you start, you might need a smaller group. Then you can say, for me, the idea is I should be the most dumbest person or the lowest in the group. I had a journey where, when I was consulting, for your ego, you need to be in the top of the group and stuff, and you're imparting a lot, but you're really not getting any benefit. But when you flipped it, that's when I actually started benefiting. You really feel like, I don't know much, I got lots to learn. And that's when you start, okay, he's successful, why is he doing it? He's done 100 units, what's he's doing it? Okay, maybe he reads lots of books, he takes care of his health very well, it's habits, how do I replace my old one with the new one on my daily routine? And all of a sudden, after 3 months, 6 months, you see a big change in your mind shift, how you think, process things and all. So that's been a massive change in, for me. Changing from my consulting work into getting into business, if that makes sense.
Just very quickly interrupting this episode, have you got a property deal in mind? Want to build or grow your portfolio but unsure how to obtain funding? No problem. At Roma Finance, they love to lend. The borrower-first approach means Roma deliver flexible, tailored solutions that accommodate the diverse needs and experience of developers across residential and commercial projects. With a flexible criteria, Roma take time to understand each borrower's unique circumstances. Roma's attentive team are always equipped to handle and take on your requests. They will guide and support you throughout the property journey. Colleagues and customer relations are the beating heart of their business. Don't forget to explore Roma's website, romafinance.co.uk, for helpful resources, including articles and case studies to guide your financial decisions. Remember, Roma Finance love to lend. Your property goals are only a call or email away. Now back to the episode. Yeah, no, it makes sense. So in terms of, the message I kind of got from that is it was sort of a gradual thing rather than it just sort of like there was a switch.
Just going quickly, you might make a lot of stuff, or you can skip lots of levels. But one thing I would say is people even from my experience over the time period of time is, don't assume, you can just go into property straight up and just make millions into it. That's not how it works.
No.
So you got
Be
different.
nice if it did.
If
but-
you're nice at it, you could do it. But I've seen lots of people, even in hard struggles, there's different levels to it. Make sure your cash flow is sorted. Could be different. You can take, there's nothing, as I said, there's nothing right or wrong. So first you can start with few cash flowing strategy, even if it is few rent, or make sure if you want to come out of a job, get your time back, then do few of those to cover your expenses. Your expenses could be, if it's too much expense, you can cut it down and make it less, or you just have few, let's say rent to rent you're doing doesn't mean that you'll do 100 rent to rent, just 3 or 4, just to make sure, your cash flow is sorted. It's a noisy business mostly, but then, you don't have to struggle, how am I going to pay my bills or any other stuff.
Yeah.
And then next level where you go into your property strategy, which could be flip, or for us, planning uplifts, and then, or few other bits where you say you chunk of money coming, it's 50, 100 or something, but it might take 12, 24 months. But that's the money which is going to come into your business and make a big difference.
Yeah.
And then from that, once you've delivered that, then you will know how to scale and do it. And then finally getting into the boring assets. For me, which is block of flats, I love those. Just because, just keeping the end in mind. For me, okay, it's a legacy because I started off, coming from a small, town in India, and then just getting onto the, big desires of getting there and sort of thing. So my end goal, if I were to retire, is to, let's say if we were to portfolio, I don't want to be with, let's say I've got 20 houses in 20 different streets. How are you going to manage it? Because when you come to, want to pull the plug and relax and this thing, managing this is going to be a nightmare. Or rather I will have 3 or 4 units, a block of flats, which are newly built. I know in and out, less maintenance. So we know in whole things how it works. Normally premium rents, it's a small little community. You build it from scratch. And mostly what I've seen with our blocks is there'll be 1 or 2 couples who's really into it. They want to take care of the whole thing. They kind of lead tenants for you. Managers, anything goes wrong, they'll call me out. They look after the whole place. And it's nice. And that's something, you want to work on it. And it's easy even from my agent's perspective. I go and talk to a letting agent. I don't manage mine because that's, again, how much time you can spend. When you get to a different level, maybe I'll bring in-house. But at the moment, we just work with professionals. So when they come, if I'm negotiating on a block, that's a different rate they give me.
Of course.
Same with somebody coming, a plumber coming to this thing, it's sort of one house. They'd see, is the whole block yours? Yeah. And then he's all of a sudden switched on, do me a great job, great service, great rates. And then you need really few sort of people to manage as a business.
Absolutely.
And it's easy to scale.
It's become a lot more popular, hasn't it? The block of flats. And I think from that kind of perspective, but also the whole title splitting scenario as well.
You got options of title splitting.
Course, yeah.
It's just basically buy-to-lets on steroids.
Yeah.
So you know that you're still doing, because it's nothing wrong with the small thing. I mean, if you look at the legal process of everything, it's pretty much the same. It's a different scale. So the legals take almost similar times, similar problems. You need to go through all this stuff, but end of the day, it just, you might be, one buy-to-let, or you end of the day end up with 10 apartments.
Yeah,
But it's just,
you get economy of scale rapidly.
and then it's just, if you can make it work, and then that's something it's really rewarding from that perspective.
100%. So just kind of going back to the sort of cash flow, capital, sort of lump sums, I think that kind of balancing act is really important. And I think a lot of people probably underestimate what actually goes into trying to manufacture that setup. Because I think some people are like, I'm just going to leave my job, go into property full time, but it's a lot more difficult to do that.
No, yeah, it's because and again, I think of the common thing what I heard, even including me, is everybody when say start how much cash flow, everybody just finger there starts with 10 grand a month sort of thing. I mean, that might be you're not doing yourself a favor to start with.
Yeah.
Probably again step level it, saying I want to start with 3, then 5 and 10, and then once you start with, let's say I want 3 grand. And you do small stuffs, even if it's like a rent to rent 1,000 thing, you already say 33% towards your goal. That's quite motivating. You say, I want to do more of those. And then every single thing you do, okay, 3 grand, you just, break even on all your expenses, everything. That's good. So you don't have to worry about how I'm going to manage whole stuff, and you got other profitable, deals to do. That's not going to be easy and on time and stuff. But then this boring sort of stuff will regularly churn your cash and gives you that time to work on the other strategy. And then once you build your contacts, your network and everything, in couple of years, you will by definitely get to scale.
Absolutely. So what's one of the biggest lessons that you've learned so far in property?
For us, in terms of, we got lots of lessons, but it's just for us, we had 4 projects going, developments on the thing, but because of planning delays and stuff, at some point all came together as well. We didn't want to manage all, so you're spreading too thin, and you need to have, there'll be issues, but you need to be quickly making decisions, doing the right stuff. So from our project, we will have few in the pipeline, but making sure there's only, big builds will be, there's only one any point of time in the build side of things. Manage that, fully finish it, and then pipeline the other one to get started on the stuff for it. It's just where the scale, and we're a huge company. We've got lots of people to manage and stuff. That's a different story. But from where we're doing, that's there. Again, finger on the pulse in terms of your finances. Things can change. There are lots, things to tweak and for. But ultimately, for me, I think it's just a team, right team you have. You will meet definitely. Property is a different world for me. Sometimes it was a bit of shock. I come from a software background, professional sort of other background, property something. So I had to align a bit in terms of expectations and stuff of it, and just finding the right people for you to work with, which you eventually will find, once you have few this thing. And for me, what it worked for me was the contacts and this thing, the plumber sets, who is actually a commercial plumber. He'll give good rates. He knows it's not one time we're doing this is a future relation. It's just investing in your relation. And for me, it's just the relation works for us. Making sure, we have the right synergy, we have the right team to scale and work with, be it investors or trade, subbies and stuff. Yeah. That's been a big, help, and just being genuinely honest with them and telling what actually working towards, what's your dream, and how we all can, you're there to make money, we're there to make money, how we all together making sure, we grow as a team. And that kind of, been really a big eye-opener and listener.
No, I bet. I mean, the biggest thing with property is it's a people business, and you are dependent on people throughout, start to finish.
That's right.
Estate agents, conveyancing, buyers, renters, builders, surveyors, consultants, the list goes on. Everything is within everyone else's hands, and you've just got to try and architect the right people at the right time to deliver the right thing.
Exactly, very true. And all the consultant attach is $3,000, $5,000. You're the one to be paid at the end. But then, it is what it is, which is what you matters. Scale of economy matters, because then you can spread across the units and stuff. And, the team you're working with, once you understand that you're with a good team, it becomes fun.
Absolutely. So in terms of the sort of trajectory that you're on, then what does the sort of next 5 years look like for you and the team?
For us, it's, so we had 2 arms of the business where we work with. One is Provident Homes, where we deliver, starter units, homes, apartments, and small houses. We tend to focus on 1 to 3 bedroom. That's where we think, because, for us, it's always, we make sure the exit is right for us when we start the deal. It's just not the sale or rent. We should be able to do either flip, either of the, depending on the market, because you are so exposed to the market for 12 to 18 months. You don't know what might towards the end. So for us, to be fair with what we had, since we had apartment schemes and stuff, what we did 38 units. It was just because when we had struggling to sell, we could easily rent it out on a premium rent and sort of making sure things, are paid or stuff. So, our dream, previous 5 years, if you asked me, I had 1 buy-to-let. I said for dream of 50 units. People are laughing in terms of, are you crazy? There are people out there sort of thing. And I said, I just want to aim for it. We managed to deliver 38 units. Wow. In terms of till date, 25,000 square foot converted. A sort of commercial to residential. It's been a big learning, but so proud, because the sense of achievement, which I was working for big MNCs, I didn't get that much, to be honest. I love the job, but in terms of you're a drop in the ocean in a big company kind of thing. But here you're physically building, the big shoe house factory we had. It's 24, it's 38 happy families living in there and calling their home and contributing to those. That's been a big sort of, for us. And in the meanwhile, we sort of, give job for hundreds of people, or in fact, thousands of people over a period of, So that's been quite rewarding. For us, scale is next 5 years. If we can get to 100 units, that will be a good thing. That's where we can get to. But we assume we need to flip something, knowing a bit more on the business side. It's not everything you can keep. You need to have an open mindset of selling some, keeping some, working with the right team, collaborating and working. It's just people business. So working with the right investors and team who understands the challenges, the risk, as well as the rewarding point at the end.
Absolutely.
And just growing on that sort of things. That's where we trajecting ourselves to be at Provident Homes. So
amazing. So just sort of leaning on the kind of balancing act then between holding and selling, what sort of things are you always, when you're analysing a project, are you always looking to deliver a minimum margin, whether it be to buy and hold or whether it's to buy and sell, or is there a particular type of scheme that you think, right, we'll sell this one on just primarily based on X, Y, and Z? I know it's a case-by-case sort of scenario.
In property, it's a case-by-case, and especially we tend to keep away, even though we had done, lands and stuff, we keep commercial just because of the planning issues.
Sure.
Working with stuff, with prior approval, it's easy. We know what we're dealing with, even if it's 2-3 months or 6 months. So sorry, back to your question.
Yeah. So it's sort of, how are you analysing that balance between do we buy and hold or do we buy and sell?
Very good question. For us, we look at the location. Is it a high value area, low value area? How is the yield versus the bricks and mortar value? What I've seen is our French developers who are in London. They want to keep the stuff, but the bricks and mortar is too is there, but the rent lead is there. Banks, as you know, the end game is when it comes to exit, you are at the mercy of the bank. So they do all tricks to give you minimum money, not the maximum. Yeah. They have pick and choice, loan to value. It's a commercial valuation. We're lucky enough to be in a place where the commuter belt, where the value and the yields are pretty much more same. So because you got two options. One is, as you said, you can to get the best value in terms of the property title split each individually, but then you'll be dealing with lots of products and it's going to be messy. But you can have with a single block valuation where it'll be yield basis. Previously for us, it should be 6 or 6.5% would be good enough. Now the banks have changed their goalposts. It's going to be 8%. If you're doing it 8%, you should be safe, with the current interest rate and stuff, which is where we're trying to do it. We sort of conservatively make sure if the project works at 8% margin, what's going to be the yield, and based on the rent, we do that. And what's the bricks and mortar? If you're thereabout with 100, 200K sort of difference, that you can make it work.
Yeah.
And for us, margin-wise, is minimum 25%. So if you got 25%, you can refinance and keep it. Even if you're falling short a bit, you can sell a few units and sort of keep on the rest or stuff. But making sure it's something still from a end user perspective, is something they aspire to buy. It's in location, town center. They got things to they aspire to buy. That's the ones we look at.
Amazing, great stuff. So in terms of, I suppose, well, actually, just touching on what you mentioned there with sort of the 8% stress test, I think a lot of people don't think about that type of stuff when they come to their first buy to let, or whereas it is important to balance or find the balance with the risk versus what you're actually gaining from the property. And in current market where interest rates are high, it becomes very difficult to make a sensible margin where you think this is worth doing. And it currently we are in that sort of climate where it is difficult to find that balance in it.
So if you can make it work in this market, you should be all right. In the future, when things get better and stuff, it's government is printing a lot of money, it's fiat currency. You've seen what the history has been, so it's all going to go up in terms of value of the assets or the rents and stuff. But then you need to make it work today as well to make it sure.
Absolutely.
So it's just sometimes it's better not to do a deal rather than doing a bad deal. You can be that's where we So we're not too aggressive. We just waiting for the right deals to make sure the numbers all works, and then we start on with it, because you're committing yourself for the 12-24 months sort of time frame into a project.
Yeah, and I think now there are some really great deals out there that, from a long-term perspective, make a lot of sense.
That's right.
From a short-term perspective, it's might wash its face, might be a bit painful, but certainly from when, if interest rates do start to come back down again, these types of deals, because there's a lot of motivated sellers out there, because it's a very, in my experience, sticky market at the moment, where there seems to be a lot happening, but not a lot actually happening.
Which is where it's going to be a right time for you to enter into an option agreement or start stuff, where you negotiate things, but it's not like you immediately starting on. You're adding value over a period of time into next, 12 months, 18 months, so you got an additional, 6 months if things are not, if council is delayed stuff, you can add those into your sort of option agreement. And then, things, if it's markets to swing in, and then you can execute on it or even do a flip, you never know. It's with property is quite tough, isn't it? I mean, what's a good deal for me might be good, or what's a bad deal for me could be a good deal, because, you might come with, it's all cash, you got another team, you got certain advantages. So everybody has got their sort of angle in how they come with. Some are good with, optimizing the scheme. Some are good at the delivery angle of stuff. Some are like, there are very few who's good at everything, if that makes sense. So you need to know your strengths, where you're playing at, and then how you are you good at sourcing stuff at right then, and then managing that within your area. And then that's how you sort of, play a long-term game on this.
Absolutely. So just jumping back to the option
Yeah.
note or comment that you just made, what's your sort of approach to negotiating options? How are you educating the vendors of this is the route that we can go down, and then getting them comfortable with an option agreement?
So the way we see it, I mean, as you can imagine, first everybody wants their £1 million straight in the banks, right? That's where it starts from. So you need to acknowledge and appreciate that. But equally saying, I'm taking a bill like the one we just doing one. It's a factory. He's been using it. It's his retirement thing. He's done. He's been 65. He wanted to just move on. But then he wanted me to say, option is a way I can give you more money, but it's going to take time. But you need to understand, I'm going to put a lot of money into it. I can't just give you blanket. If I were to buy it now, I can buy it now, but it'll be a different price. So it's just understanding, is it a time-sensitive thing or they need maximum value? So when the vendor is to us, I want every penny out of this, my deal. I'm happy to wait for a year and a half. Then they're more open to it and say, so what's your vision? They say, okay, I want to go retire and stuff. Okay, you got a business, other things, it's 12 months is no big deal, or we can plan based on your taxes, you get some money here or whatever. And when you start educating them and they said, okay, it makes sense. It's I can't buy anything without no planning in place. I'm taking a lot of risk, and that risk needs to be mitigated in the price. Or you can get along with me. I'm going to spend probably another 30, 50 grand on this building. It's nothing for you to lose. So option agreement, okay, I'm out of the hook in terms of not buying it. But end of the day, I would have spent 30, 50 grand, where you have clauses saying 3 months, I'll put a planning application. In 12 months' time, we will have a decision in place. But all that, we have an option agreement in place, but then we are spending money. If we can't do it, it'll be tough for others. But our intention is to give you the greatest money. But end of that 12 months, we know that, we got these many units, this is going to be the value. We can honor the price. Banks will be ready to fund. It's a win-win for all teams, parties, and they kind of, okay, I get it. Yeah. And then we educate them, in terms of one thing, people need to understand is where most of the deals gets bad is when it comes to the solicitors. So you are a vendor, we have a good conversation. And you go to your solicitor, mostly if it's not a switched on commercial solicitor, they say, are you going into an option agreement? That's not great. You should come out of it. It's all in favor of the developer and stuff. So I'll be a friend and saying, it's an option agreement. This is where your benefits are. And we will have milestones put onto the option agreement. Say, these are the milestones we are supposed to hit. 3 months, we will have planning submitted or drawings done and submitted. Then you have this much time. And only if it goes in sort of, rejection or appeal, then you need an extension for 6 months. But that's not going to be rare or maybe, but that's the risk anyway you have. You're open and honest about that. And they said, okay, it's fine. So when the solicitor goes and tells you, no, I'm aware of it, get on with it. And that's how we move on.
Amazing. Great stuff. So to round the episode off,
yep.
What's the best approach people can take to find development schemes?
To be fair, some of the deals what we've done is on open market. So what people don't understand is there's deals out there. It's more about you educating yourself. I'm the one looking at it. Be up to date with the new planning changes. Whenever there are changes, it's not good, but then that creates pockets of opportunities. Now the government is coming with, greyfield land or prior pooler stuff, and you understanding what's the minimum spaces. you being a, let's say, owner of a building given to a lousy sort of architect who would have done like, 1-bedroom apartments, 700 square foot each and stuff. You understanding the plan, okay, it's got to be like, 5. Okay, I know, like, you could have 1-bedroom, 500 is going to be a good thing. You need to have more number of units and then circles, if I were to add value from that perspective, not necessarily. I mean, you can add value in different ways. So open market, not everybody might think in that perspective, let's say. So where are the ways in which you can add value? That's one deal which we did in Milton Keynes. Another one was an open market where there was a laundrette with 2 apartments on the bar and a townhouse back. The laundrette and the townhouses, they were trying to sell it as 3 townhouses. They got planning for 3 houses, and it's not been sold for 6 months. Because if you look at the conversion cost to convert the whole thing, to a townhouse, that's so high.
Yeah.
And it's just a simple sort of approach. We said, there's a massive 2 apartments. What said, in that area, we just look at there's a demand for social housing side of the business. Mm-hmm. We collaborated with them. We made a plan to make it into a 16-bedroom HMO, converting the laundrette to a 4-bedroom apartment, keeping the apartments above, but carving up another bedroom. So total like 16 bedroom. So on a 5-year FRI lease, it's a massive good deal in terms of, what you're doing. Your conversion costs are less. That's the way, educating yourself, understanding what are the different options you're having, and then going with an open mindset. Then deals will automatically come out. Not necessarily everybody look, it's just people think, people give you a ready-made deal straight up there. Here's a profit margin for you to 25. That's not how it works. Mm-hmm. So it's just constantly updating, as you said, from your side, being in a planning group or, other podcasts or something related to that. Keep listening, and then all of a sudden, when you have all this knowledge, deals will all of a sudden appear. Mm-hmm. Wow, I can make this work. And that's how I think people are tying up good deals.
Amazing. Great stuff. That's a great answer. So if people maybe have got a plot of land or they've got a unit in Milton Keynes or they just want to reach out and they've enjoyed this episode, how can they go about doing that?
Yeah, I'm available on social media, LinkedIn or Facebook, Sreelal Harilal. That's there. Or we can connect through our website, providenthomes.co.uk.
Cool. Happy days. I'll put all the details in the show notes.
That'll be amazing.
Hopefully, people will get in touch.
Great.
I appreciate you coming on today and obviously making the trip up from Milton Keynes.
Thank you very much for having the opportunity to give me to talk here. Thank you so much.
Pleasure's all mine. Thanks, Sreelal. Thank you very much for tuning in. Hopefully you've got some value from that, particularly from that transition from doing buy-to-lets to development, and as well as also creating deals in a unique way, I suppose, looking at Rightmove and seeing what's out there, but then putting your own spin on it, such as Sreelal sort of described in that last moment. As I always say, if you've reached this point of the episode, please do like and subscribe. It helps us continue to get amazing guests like Sreelal. We'll see you again soon. All the best. Bye-bye.